All right, feel free to take it away.
Great, thank you, Nicole, and thank you all so much for joining the call and for asking me to present on our work to you. I'm David Krantz. I'm a doctoral candidate at the School of Sustainability at Arizona State University. Also, the founding vice president of the Sustainable and Impact Finance Initiative (SIFI) at ASU, and it's an honor and pleasure to be with you all today. So the work that I'm presenting today, it's not my work alone by any means. It takes a village, really, and here's a partial list of all the people who've been involved in the work that I'm presenting today. I particularly want to single out Jeff Mindlin because none of the good work that we've done would be possible without Jeff's support. And certainly anything that we've done today that I'm going to present on that you like, it's to Jeff's credit. If there's something that we've done that you don't like, Jeff had nothing to do with it, and you can blame me entirely. But this is very much been a teamwork. That said, of course, everything I'm saying, these opinions are my own, not necessarily those of others or other organizations or of SIFI or of ASU or ASU's foundation or anything like that. It's all on me. Also, I've presented on this work a number of times. If you've heard me present on this previously at any of these other conferences, then my apologies for anything that's repetitive. Everything that I'm presenting here is going into a paper that I'm working on, hopefully to be published next year, because basically I'm laying out ideally how this kind of work can be done at other schools and using our work as a case study. So along those lines, there's some premises on which I'm working and on which SIFI has been working. One is that sustainability is itself a worthy goal. Another is that institutions should take responsibility for their investments, that where institutions place their money is important. And that also students should be involved in decisions affecting them and future generations of students. So when we're talking about endowments, where the primary purpose of the endowment is the sustainability of the university, right? And the primary purpose of the university is to educate and care for students. So we think students should have a say in that process. Most importantly, of course, that sustainable finance is fiscally prudent and it's more profitable in the long term because we're approaching this as shareholders. So we invest in companies and we want those companies to do well so that our investment does well. And we think that when that is done in a more sustainable fashion, and we think evidence proves this, when that is done more sustainably, it is more profitable. So you probably already bought into everything I'm presenting here in this regard, but just going over it just in case. Why should we be doing this? So that we align investments with organizational values. At ASU, everything that we've done at SIFI through the and through the endowment is in alignment with ASU's charter. So it's about making the money reflect what the values of the charter say. Also, it offers opportunities for student learning and student engagement outside of the classroom in a very real world opportunities. It allows for expansion of organizational capacity. In that case, we've been offering the endowment ways of doing more work than the endowment necessarily would be able to do on its own without us. Endowments, as you know, typically are not all that, they're typically understaffed. And so by involving students, the endowment's able to do more than it would otherwise do. And of course, to make a positive difference in the world, very importantly, and then of course, to be more fiscally responsible because the way that we spend the money sustainably and the way that we work and engage with companies for sustainability is to create more profit for the endowment. So the big thing that we're working on right now is this student-led network. We don't have a name for it right now. The idea is that the network will name itself. And that's because there's a number of things that we have about this network is, first of all, it's for student groups. It's not for colleges and universities or endowments to join. It's for student groups at colleges and universities with endowments to join. So it's student-led. It's supported by professionals, but it's not run by professionals. It's run by students for students. It's, in this case, we've teamed at SIFI at ASU has teamed with IEN and As You Sow for their support to help us to build and manage this network. But students, importantly, students make all the decisions, including what the name of the network will be. Students make all the rules. How are we going to self-govern? How are we going to make those decisions? Those will be decided by us students ourselves. And students own the group. It's a student-owned group. It is not owned by SIFI. It is not owned by IEN or As You Sow. It's a student-owned group that we're creating. We're looking to welcome all student groups at all development stages. So we've been doing a lot of work at SIFI that I'll present to us today. But if you know of a student group that is just starting off and or a student group that has been doing some of these things, wants to do more, whatever stage they're involved in, we want to work together for this network. We want to be able to share best practices with each other, and we also want to be able to work together. So, if one of our companies, if one of our clubs is working with a company like BlackRock or Chevron, say, then we approach that company and engage with that company. Then it's just one of our clubs. But if we work together with other clubs, our thinking is that we can have a broader impact. We can, if we approach a company saying like, okay, we're 15 schools, we're 30 schools, student groups at 15, 30 different schools coming together, that we can have a bigger impact when we work together, when we coordinate together, than if we just go as individual student clubs at different schools. So how did all this get started? Basically, SIFI has its roots going back to the fall semester of 2020. And I've developed retroactively gone back and looked through at 7 different steps that we took to get to where we are today. So the first step was recruiting students to be involved. Second step, educating those students. Third step, deciding on how to vote with existing shares. Fourth step, to decide how to invest money. Fifth step, to institutionalize all of this so that it's not just out in the ether and it doesn't go away when students graduate, but to have it institutionalized so it can continue from generation to generation of students. Sixth step, to implement all these steps. And the seventh step, to network with other schools and organizations. So in terms of recruitment, what was done was reaching out to students of diverse backgrounds, so not just finance students, but students from across the university, and including students without any finance background whatsoever. Totally interdisciplinary, and mixing across student generations, undergrads as well as grad students. And we met all online. So here's one of our meetings. Everything that we've done at SIFI, everything that I'm describing today, has been done totally through remote meetings via Zoom, because we started during the pandemic, and we've continued this way, and it's been working. Our meetings have been informal, and they've included education. So there hasn't been homework, there's no grades, there's no assignments, no pressure. Essentially, it's just learning for learning's sake, which is a nice break in academia. And it's been accessible. It hasn't been focused. Like, you wouldn't need to have be a finance major to come in and understand what's going on, and you didn't be a sustainability major to come in and understand what's going on. It's been accessible to people across the board. So one of the first things we did was set up voting guidelines. Like, okay, so the endowment already has shares, and how should they be voted? So 20 of us got together to develop proxy voting guidelines. It was a 36-page document covering all of these issues here. And it was officially approved by the endowment. So we wrote the proxy voting guidelines that, and thanks to Jeff's support, it's now officially the proxy voting guidelines for the endowment. And its intention is for it to be a living document, so that we will update it occasionally and expand upon it as needed. That it's not just something that's fixed. So so from all of these things, we broke them down to all these different sections. I'm going through it quickly. I'm just trying to give you a sense of what is covered. I don't expect you to read through everything, but it was a very, very thorough document, basically. But it can still be expanded to. Not quite as thorough as we would like today, but quite thorough. So here's an example of something for that was part of the proxy voting guidelines. And basically, we have two different sections. Why we should vote a certain way, and then how we vote. So here's another example. This one on executive compensation. So again, why we should vote a certain way and how we should vote. These are the sorts of shareholder proposals that we would vote for, and these are the sorts that we would oppose. Just providing these as examples. Again, I don't expect you to read through the whole thing. Then this is the part with which many of you on the call are probably most familiar. That we were given $1 million to invest as we saw fit sustainably. We invested about 99% of that in different funds and corporations that we thought were working to build a better world. And we spent about a little less than 1% of that buying shares in companies that we wanted to engage with. Companies that we don't think are necessarily right now building a more sustainable world, but that we think have the capacity to do so with the right engagement to help push them along that way. And then we'll become successful investments because of our work. So the next step was in terms of institutionalization. So we formed a student club at Arizona State and affiliated with the School of Sustainability, also with the business school, the Sustainable and Impact Finance Initiative. And then we began our engagements. So far we've had engagements with two companies, with both BlackRock and Chevron. Of the two companies, we've had multiple engagements with these companies. Our engagements with Chevron so far have been more successful. So we've been discussing lobbying disclosures with Chevron, and thanks in part to our work, Chevron has released more data this year. Now we're part of a whole ecosystem of other groups that are also engaging with Chevron and asking for all sorts of things, including for more data around lobbying. But this year's lobbying report from Chevron included much more data than in previous years. And we know we had an impact because they specifically disclosed information about their involvement with the National Conference of State Legislatures, as well as ALEC, the American Legislative Exchange Council. And these are disclosures for which we asked specifically during our engagement with Chevron. We've also co-filed a shareholder resolution with Chevron. Here's basically the ask of that resolution. Your too long didn't read it summary would be that many companies achieve reductions in greenhouse gas emissions, not necessarily through doing anything that reduces their emissions, but in terms of selling off assets that produce a lot of greenhouse gases. And then it's like, okay, yeah, see, we're not doing that anymore, but they sell to another company that's still doing it. So in that sense, it's sort of a false reduction, because the reduction actually net-wise doesn't take place. It just shifts from one company to another. So we're asking Chevron to clarify that the way that it calculates its reductions isn't using it when it sells off companies or other assets as part of those reductions, essentially. Our next things we've asked for, we want Chevron to disclose its ties to other public influencing groups other than formal lobbying, as well as to disclose its methodology for misalignment with trade associations. So, for example, if Chevron says that its goals are to align itself, with the Paris Accords, then it belongs to a trade association that is working against the goals of the Paris Accords. How does Chevron mitigate that? How does it work within those trade associations to change that? Or at what point does the company decide, okay, we need to pull out of that trade association because there's this misalignment with the goals between the company and the trade association? So we need to better understand that. That's what we've asked for next. So next step would be voting proxies. So the foundation has a $1 billion endowment. It's managed by mostly by BlackRock. BlackRock has allowed some percentage of shares held by organizations such as endowments to be voted by the endowments. That's a new thing as of, I think it was October of 2021, if I remember correctly. So we were able to vote the shares for the endowment that the foundation was able to vote. I think that was about $55 million worth of shares. So the vast majority of the shares still are not able to be voted by the foundation, but are voted by BlackRock. And networking. So we've built partnerships with not just IEN, but also, as you saw, and Ceres, and part of the Ceres network. And then we've participated in IEN's student corporate engagement competition. So we've participated twice. 2 years ago, we participated alongside Dartmouth, Berkeley, and University of Chicago. Yale was early on, but withdrew. We won that competition. One of the things that we said that we wanted to do out of that competition was to build a student shareholder network so that we're better able to work together. And that's what we are doing right now. So everything that I talked to you about in the beginning, this is what we're doing now. We're looking for those student groups to join us now. Our first meeting is being scheduled now to be held late next month. And I think, Nicole, you have links for the interest forum and the doodle poll, if you can put those in the chat. If you are involved with a student group that would be interested in participating in this network, please let them know. Or if you know of a student group that would be interested in participating in this network, please let them know. And of course, I'm here to answer any questions now, or you can reach me via email to answer questions later. And I'll thank you all so very much for attending and for listening.
Thank you, David. Sorry, I don't know what just went on. It asked me to share my screen. I think you can just hit stop screen sharing. There you go. Perfect.
You're all still here, right?
Yes.
Okay, great.
Thank you for that amazing presentation. Does anyone have questions for David? Covered a lot.
Just a quick question. Are schools that are not in the IEN network allowed to participate?
Yes, absolutely.
Got it.
Yeah, we're working in partnership with IEN, but it is not an IEN project.
Got it. Thank you.
And Dorian had a question in the chat here. You mentioned other investor groups that you were working with, I think specifically in relation to the Chevron engagement, just sharing what those groups are and what those collaborations look like.
Sure. So there's two different groups. So there's the shareholder resolution. We co-filed that. That was co-filed with other groups. I don't recall offhand what those groups are. I think Jeff probably knows. So if you want to reach out to him or reach out to me later, and I can get it to you. Then in terms of the engagements, we haven't been working with other groups. I just know that there are other groups out there that are engaging on these matters. But we haven't been coordinating with them. What we want to do is coordinate with other student groups. We want to be building this network of student groups that are all working together. And then we think we can have a much bigger impact together.
Yeah, and I would just add, like on David mentioned Chevron, so we co-filed a shareholder resolution about Chevron related to their disclosures of transferred emissions. So again, kind of given resources and expertise, we decided to co-file a resolution versus creating our own from scratch. So something like that, we would have partnered with somebody else, somebody who's already working on it. So through series and as you vote and ICCR, that's kind of how we found who to team up with there. But David was right on the other fronts.
I have a quick question. You mentioned that you have students involved that aren't just from like an investment discipline, like you have students from different majors and different backgrounds. How do you kind of get all those students on the same page if they don't really come with any investment knowledge?
Yeah, it's a good question. So part of that is there's two different pages, right? So there's a page of values. So everyone who's joining is already joining, from that same page of values, that this is, those premises that I presented in the beginning, where we all share those. Then there's from the okay, how do these different mechanisms work? And for that, we've been having educational sessions. So and that's very very low key, very much designed to be able to reach people across different majors. Some of them have been led by professionals, some of them have been led by students. This year it's been I think entirely student led, where we're teaching each other. And it's I can tell you that I did not I and many other of the students who've been involved did not enter this, with a strong sustainable finance background. And I'm at the School of Sustainability. I'm not a finance student. So it's something that we've been learning through doing.
I would just say from our perspective, and my team has a culture of open door, so we'll meet with students that want to talk about some of these things. But one of the things that's nice in having SIFI for us is that we can also direct students that way. So oftentimes, students will want to come and talk about policies or things that we're doing from a sustainability perspective, and again have no idea how investing works or how the endowment works, right? So they don't get that we own a lot of funds, right? And so we're not making direct investments in a lot of companies, or they don't understand that, even only a portion of our investments are in, publicly traded stocks, they're in bonds and other things, or what a fiduciary is, or things like this. So, so sometimes it's nice to be able to direct them towards SIFI to kind of maybe get a more educated perspective before they come to us on some of these things that maybe aren't right, or don't make sense to them.
Dorian, I see you took yourself off mute. Do you have a question?
No, I'm
Okay.
I just forgot to put myself on mute. But since you called on me, I want to congratulate ASU, the first winner of the SIILK Research Challenge, not only because they were so great when they won, but also because they followed through on what they said they wanted to do, to create the student-run network. So that's impressive and supportive. And I hope Nicole does a 60-second commercial about the Student Research Challenge, and we get more of you engaged and involved in doing that as well.
Well, I will just quickly say, that is the main reason the IEN is partnering on this student-led group, is because we're really enthusiastic of this outcome actually coming to fruition from the challenge and supporting students in that work, and see it as really complementary to SILK and connecting student groups across a variety of topics. So if you're more interested in private equity or just connecting in general or looking at curriculum, that you can do all of that within SILK. But if you're really excited about the public equity piece and the potential for engagement, that this student-led network is a really great place to do that. So high enthusiasm levels. And Matthias, do you want to speak to these questions that you have in the chat here?
Yeah, sure. So I had a different understanding when he was talking about the voting and the decisions, what they vote for and against. So I had understood it were equity investments, but in which instance are then the students voting? Is it for the publicly traded companies? Where does that happen?
Yeah, I mean, that's been an evolution for us, again, given the efforts of David and SIFI. So, you know, kind of as he described in the early days, we created they created a proxy voting policy for us that was really more theoretical. It was a tool that we used to talk to our managers that were voting proxies on our behalf, because almost all of our investments were held in funds or things like that. Then as kind of the evolution happened, the students then bought stock in individual companies for engagement efforts. We had other student managed funds that were holding individual stocks. So when we started voting proxies ourselves with as you sow, as you vote, that's where we started. So it was a couple $1 million worth of securities that we were voting directly. But then as we got comfortable with that, that evolved. So then we added another separately managed account that a third-party manager had, and they had been voting the proxy voting, but we took it back over ourselves. So we went from a couple of stocks to a couple $1 million worth of stocks to 30 million worth of stocks, and then we just replaced one of our funds with what they call a direct index. So we replaced kind of a ETF with the individual securities. And that did a couple of things for us on the investment side, but also allowed us more direct ownership. So today we're voting proxies for about 100 million worth of our securities from 0 2 years ago.
Nicole, I have a question. This is Eric.
Please.
Hi, I'm sorry for my late joining the meeting and my bad connection earlier. So David, great presentation. Thank you so much for sharing it. I wondered, does Arizona State also have like a student-led just investing group that has other funds that, direct investments? And has your work been presented to them as a way to help them sort of consider engaging with those companies?
I'll take that real quick. I don't know, David, if you've interacted with them, but so we have 6 student managed funds in total across the university. So we've got the one that David had talked to that's got a specific ESG focus. Then we have 3 that are managed out of our business school that have more of a quant approach. Those tend to be turned over in their entirety at the end of the year. So they're not the best candidates for kind of the engagement like you would normally. Again, proxy voting will work if we hold the stock during the time, but since we're not long-term holders, it doesn't work as well. Interestingly, for this group, those students get to pick the strategy. So every year that each of the 3 funds gets to pick what kind of factor or phenomenon they want to try to exploit with their quantitative modeling. This year, one of the 3 picked a fairly conventional quality, value, profitability approach, but then they added on a carbon intensity layer. So they were specifically trying to tilt the portfolio to investing in companies that had lower carbon footprints. And speaking to the faculty that leads it, we're actually thinking about making that a requirement for every year, that one of the 3 groups has some carbon, environmental, ESG dimension to the strategy that they build. So again, probably not as much on the engagement side, because they'll still be turned over all the time, but starting to get them more active on that side too.
Yeah, that's great. We have at UNH, we have a student run group And sometimes they have a subgroup that's interested in on the sustainable or ESG investing side. But I'd love to put them in contact with SIFI, because from there might be the possibility of like an offshoot that really is more like this, more oriented towards the SIFI focus. But could be a great place to start.
Thank you, Eric. Other questions for David or Jeff? Dorian, go for it. You don't have to raise your hand.
All right, thank you. David, you mentioned these written guidelines that the students develop. Can you share those with IEN, and maybe you already have, but share those with us so that we can post it on the website and share it with other universities to see what professional guidelines look like that are generated by the students, if I understood you correctly.
Yeah, we wrote the guidelines, then they were adopted by the endowment. We have only shared them in very private channels so far with others who have been looking to develop similar sorts of things. If they were to be shared publicly, we would want to do so with Jeff's approval. So that would be for Jeff to speak on.
Yeah, I think, and we, like David said, we, with all these things, right, as part of why we get involved is we're also trying to make sure that we're bringing in a fiduciary lens. And I think that was a big part of the iterations of even like the proxy voting policies that we're looking on, is trying to think through these issues from the perspective of, do they bring shareholder value over the long term, right? So, obviously we want to be doing what's right overall, but if we can't somehow tie it back to it being better for the company in the long term from a value perspective, then it's harder to kind of weigh in there. Obviously there's a lot of research on, diversity as an example, having better outcomes if you have board diversity and manager diversity and things like that. So things like that are easier. Some of the other ones that are maybe socially right, but harder to pinpoint things on the profitability side or harder. So those are some of the edits that we made along the way. But yeah, I think they're probably good to share publicly. They've been all ratified and everything like that. And again, they're guidelines. So it's not how we voted any specific issues. It's more just how we're thinking about it. So I think we'd be comfortable with that.
And Jeff, there's also a question in the chat here, if you're able to speak to the performance of the ESG student-led funds.
Yeah, I mean, so I just kind of get, so we have three kind of more quant. We have the ESG one, we have a real estate one that's publicly traded real estate, and then we just launched a new ed tech venture capital oriented one. So the interesting thing, and I think this is a bigger issue and good for this group to hear, I think engagement at the student level is tricky, right? I mean, it's, you're getting a new crop that comes in, every year, every couple of years, and keeping the momentum that we've had with kind of the early founders like David and others can sometimes prove tricky. And that's been part of the issue with the fund as well, where we had a lot of interest in the first couple of years, then less students, and it kind of waned and things like that. So the fund itself has bounced around. I taught it at the beginning, and then it moved over to the business school, and they weren't exactly sure where to place it relative to other things like that. So there's been kind of different levels of engagement and things like that. We ran it as a club one year. That was what David was alluding to. So kind of when it was apples to apples, it was doing well. The students had done a very similar kind of approach where they didn't want to get too far out there in the strategy, and wanted to maintain the tracking error to the benchmark at a low level. And so they didn't get into big divestment or things like that. It was really more trying to optimize for like the best companies within each sector, but still had some oil and gas and things like that as an example. And that year they performed really, really well. Now it's evolved, and kind of to David's point, it tends to be less individual stocks and more funds that are providing some examples of the gamut of sustainable investing. So there's some funds that are exclusionary, some that are thematic, some that are impact oriented, some that are ESG optimized, and then obviously the individual stocks. So it's not really apples to apples, but they've been performing well overall. And then and again, I think most of it is really more just the difference in strategy from the other ones.
Thanks. And I just want I said it before, and I just want to emphasize, and Jeff said it also, these are all financial decisions. That our thinking behind all of this is that doing things sustainably and supporting sustainable decisions by companies leads to a better financial outcome for the company and for its investors. So we're engaging as investors, and it's if we make the company, greener, so to speak, right? We think that leads to a better financial outcome, and we have the academic research on that is still new, but so far what we've found is that we're correct in that thinking. So these are very much financial decisions, and we engage with these companies. So as shareholders, we think that if they do things more sustainably, we'll make more money that way, and that will benefit the university and the endowment and future students. And that's the underlying decision making aspect under everything that we do.
And then on the VC one, so I mean, I think, broadly speaking, I think of it on the impact side, right? So I think it is relevant for this group. This is the first year that we've launched it. So they have yet to even make an investment, to be honest. It's kind of the idea would be at the end of the school year, they would make a recommendation. We have done a lot of ed tech investing separately, kind of ourselves, a little bit within the endowment, but a lot with our balance sheet. And again, those have been, again, probably more impact oriented in the sense that we're making those investments to help the university. So, we did a virtual reality one, and we've done a lot of things in trying to build tools to expand STEM proficiency, especially in underserved communities. So there's a lot of companies doing things like that. So, and we've had a lot of good returns from there. We did one that was around adaptive learning that just doubled in 2 years, and we've done ones around educational attainment. If you ever go to Starbucks and you see that baristas can get an ASU online degree for free, that education as a benefit company we spun out of the university in partnership with the Rise Fund and TPG, that's been a phenomenal investment. So there is a lot of returns to be had and impact and those kind of things, but the VC student fund is super early. Yeah, and to Bella's point, I think what we saw when we were looking at the different student funds that are doing, ESG or impact or things like that, probably most of them have more of a venture tilt than public markets tilt, especially if they're impact oriented. So there's a lot of better models out there.
And we have less than 10 minutes left here in the call. So just want to give another huge thank you to David and Jeff for joining, and your great presentation, David, and discussion around ASU's work and the public equity focus. And I think the conversation about venture funds is a nice potential segue just to see if anyone on the call has updates on their work that they would like to share, or other more general questions not necessarily related to the public equities and engagement piece.
Sure, I'll say a word or two. So last year, after the Virginia Wesleyan teams win in the IEN corporate engagement competition, the Board of Trustees decided to give us $50,000 to invest along a sustainable lines, and we're going to be beginning that in the future. So I guess definitely going to be all in this student network. I think learning from each other is certainly going to be an important thing, and I'm certainly looking forward to that.
That's great, Rowan. Thanks for sharing that update. Would you mind adding a little bit of context, if you're comfortable, around what those conversations looked like with the board?
Sure, I would love to. After our engagement strategy, which we decided to do a recycling strategy for Ford Motor Company, our Board of Trustees, watching the competition, thought that our work was very good, and they invited us to the quarterly meeting. and we were able to present a little bit more on our strategy and what our goals were for the future of the organization. And that gradually turned into our president announcing that he would like to establish a fund, and the rest is history from there. It was a lot of work within the organization, and they've been figuring out the way that they would like to see it run and what would be best for the students. And we will be practicing it in the fall. So certainly looking forward to that.
Rowan and Jeff, those are two amazing outcomes that the SILK Student Research Challenge had some impact on. I don't do this usually, but let me speak on behalf of IEN. I think we want to follow up with both of you to get more detail on that so we can put that into a communication piece demonstrating the value that comes from not only your work, but engagement in this challenge that we've created, and invite all of you who are here to at your universities to become similarly engaged. I think that'll help accelerate the development of the student network. They'll say, oh, wow, it can and has made a difference by being engaged and involved and participating and sharing. What do the rest of you think?
Yeah, those are definitely two huge things to celebrate. Go ahead, Jeff.
No, I was going to say, I think to your point, Dorian, and Nicole and others have heard me make these jokes, but right, I mean, I think a lot of our boards and governance can be, kind of pale, male, and stale, and aren't always super excited about some of these topics. But the one thing that all these groups have in common is they obviously have a passion for their respective universities and helping students. So one of the things that we've seen, and it's interesting hearing it from Rowan on their side, is it's a lot easier to kind of sneak in education if it's coming from students and kind of hearing students perform and excel. And when you've got incredible ones like David and other ones around here, they're much more open to hearing it, and then it drives change. And it's a lot better coming that route than from me directly sometimes. And it's interesting to hear that they had a similar experience over there.
I can share with, in terms of the development of the network, it's something that I had thought of back in October of 2020. And it grew out of the frustration of a potential limited impact and how can we have a bigger impact together. But it was really through participating in the IEN competition in spring of 2021 that I really started thinking with others at ASU, at SIFI, about how we could operationalize it, how we could take that idea that I had from October of working with other schools, and how could we make that happen. And it's been now 3 years in the making, and it's really happening. And without the participation in the competition, I'm not sure that we would be where we are today. So it's with great gratitude to IEN for holding that competition and inviting us to participate in that, and for working with us as a partner today to form the network that we're able to make this happen. Thank you all.
Thank you for those kind words. Glenn, were you going to say something?
I just had a question for really anyone in the group. We've been trying for several years to vote proxies in our student-run funds. Our custodian only works with one piece of software. It's been a huge expense item. Have other people run into issues just on the practical aspect of getting from students' decision on voting to actually implementing those votes with a custodian?
I mean, for us, it was fairly seamless with the As You Vote and Broadridge. But again, if there wasn't that software component to it, it is onerous. I mean, even in the early days when we had, just our student managed funds, I think last year we voted, 700 proxies across, a handful of companies. So like it's a lot of work if there's not a technology aid in it.
Yeah. So we're paying for the Broadridge, but my gosh, it's for a $30 million student funds. It's onerous. So apparently that's just the way it has to be done. So if anybody has any other ideas, I'd love connect with me on LinkedIn. Love to hear how you guys get that done. Thanks so much for this call. I thought this content was fantastic.
Thank you. And I know we are right at time, so I will just leave it open for 1 second here. We'll have another call next quarter and are very open to ideas for presenters or topical focus areas. If anyone is really itching to dive into something, I would love to hear it.
Nicole, can we ask for a comment from Tokyo and Jerusalem, if I heard correctly, since we have such global presence here, which is rare?
You have any thoughts, Alana?
So we're at the very beginning of building our fund right now. So it was very interesting and great for me to hear how you did the whole process, all your different stages, especially the education part. I would be happy to probably reach out a little bit later to talk even more about the educational part. But this was amazing, very, very interesting. Thank you so much.
Thank you.
All right, well, I see people are starting to drop off. The last thing that I wanted to quickly mention is we have migrated all of our SILK resources onto one page on the IEN website that I'm just dropping in the chat here as well. So if you're looking for recordings from past SILK calls, to see presentations from what other funds are doing, some of our databases on how funds are structured, assets under management, any of that information is on that webpage. So if you have any trouble accessing, definitely let me know. And thank you for dropping those links in the chat again, David. Hope to see many of you again on this upcoming new student-led shareholder engagement initiative call. So reach out with any thoughts, questions. So appreciate you all joining and talk to you all soon.
Thanks so much.
Thank you.